I'm Matthew Galgani with the Daily Stock Analysis for Friday, August 5th. Today we'll look at Mercado Libre, an e-commerce company known as the eBay of Latin America. Knowing when to sell or hold is one of the toughest parts of investing, especially in a volatile market like we're in now. So using Mercado Libre as an example, let's do a quick simulation showing how you can look at both the action of your stocks and the behavior of the overall market to decide whether it's time to sit tight or sell. Here's what Mercado Libre's daily chart looked like on March 28th. It had formed a double bottom pattern with a buy point of 75.24, 10 cents above the peak in the middle of the W. It broke above that buy point on March 28th. You want to see volume at least 40 to 50% above average on a breakout, and the stock just met that minimum with volume 43% above average. But the overall market was still in a correction at that time, so let's say you decided to hold off on making a buy. The next day, the market had a follow-through day and bounced back into a confirmed uptrend. Mercado Libre also moved higher, and big investors scooped up shares as volume rose 207% above average. So let's say you bought the stock as it moved again through the original buy point of 75.24. By late April, you were up a little over 20%, so that could have been a good opportunity to sell into strength and lock in those profits. Remember, most stocks tend to pull back after going up 20 to 25% from a proper buy point. That's why it's a good idea to take most of your profits in that same 20 to 25% range. But for this simulation, let's say you decided to hold. In May, the overall market came under pressure and fell into a correction, and Mercado Libre pulled back at the same time. It had been holding up relatively well, consistently staying above its 50-day line. But note the action on this day. The stock had tried to move higher, but reversed to close at the bottom of its range, and volume was well above average, indicating some investors were unloading shares. That could have been another incentive to lock in your gains. Then on June 6th, the stock plunged below that benchmark 50-day line and closed near the bottom of its range for the day. Although volume wasn't quite the heaviest volume in months, it was 124% above average. That kind of action is a big warning sign and often marks a change in direction. In other words, it's now more likely the stock is headed down than up. Your best move would have been to sell to protect what was left of your gains. If you had sold during the day around $85 a share, you still would have locked in a respectable 13% gain. And keep in mind that the overall market was in a correction at this time. So the market was in a downtrend, and your stock was crashing below its 50-day line on huge volume. Even a die-hard Chicago Cubs fan would have a hard time sitting through that. Here's where Mercado Libre was trading as of August 1st. Since July, it had been trying to recapture its 50-day line, but it kept getting shot back down. That's a clear sign of a lack of support from big investors. On August 2nd, the stock dropped below its 200-day moving average line and continued south from there, gapping down hard on Thursday. And note how volume was picking up on the downside, a clear indication that some big investors were heading for the exits. But if you'd followed some sound sell rules, you could have locked in your gains at 20% or gotten out with a smaller but still decent gain as it broke through its 50-day line. Or in a worst-case scenario, you could have cut your losses at no more than 7 to 8%. Following a few simple rules like these will help you sell at the right time to maximize your gains and minimize any losses. For another recent simulation on how to decide when to sell or hold, see our latest IBD 2-minute tip video. You'll find it under the Browse tab in IBD TV. That's the Daily Stock Analysis for Friday, August 5th. Thanks for watching.